I would like to welcome you and thank you for joining the webinar, How COVID-19 Has Impacted Lending. I am Barb Ellers, and I will be helping as a facilitator for this webinar, as well as one of the presenters. I would like to let you know that I will be monitoring the questions and answers tab throughout the webinar. So if you have a question, please feel free to post them in that tab at the bottom of the window. And then I will try and bring them up in conversations as Kirk and I proceed. We will have some time at the end of the webinar to also answer any questions that we don't get to during the presentation. Today, we will be discussing how Cornerstone Fund is partnering with churches through the COVID-19, the implications of the CARES Act, and the changes to lending in the future. My name is, like I stated before, my name is Barb Ellers, and I am the relationship specialist with the Converge Cornerstone Fund. When it comes to loans, I will work with Converge Church from the dreaming stage of a project, any questions you may have during that process, up until a completed application, which my colleague, Kirk Tate, he's also going to be presenting with me. And he takes, Kirk, if you want to go ahead and let them know what you do.
Yeah, definitely. Welcome, everybody. Thanks for joining in on the webinar today. I am Associate Director of Church Lending, meaning that I work with applicants from the time that you submit your application, working with Barb, really all the way through the loan process, getting the approval, handling the underwriting, working on the contingency items and working towards closing. And then also partner with the operations team on making sure that your loan and all of our loans within our portfolio continue to operate as they should, and answer any questions that you have throughout the course of your loan. So I'll be addressing some things a little bit later. Barb will be jumping on first, so we'll let her kick things off.
Great. So I even see one of the first questions kind of will be answered in this first slide. Some of the distinctives of the Cornerstone Fund partnership versus your local bank, the current bank. Because you are a member of the Converge family, and we see ourselves as part of the family also, and just another ministry of Converge, we are committed to partnering with your church throughout the term of the whole loan commitment. When instances like a pastoral transition happens within a church, or even like what is happening these days with COVID-19, and where the congregation has not been able to meet in your building for several months, I know some of you maybe even longer, we totally understand that can cause a decrease in the church's giving. We have always, in our 65 plus years history, have worked with churches to come up with an agreeable repayment terms to help the church until they get back on track. That's not always something you'll be able to see. We're very ministry driven and believe in giving grace and want to partner with the Converge churches through those times. Another distinctive of Cornerstone Fund versus your local bank is the bulk of our operating income. Over half of that goes right back into ministry. It's going to help fund many of the different ministries of Converge. In both 2018 and 2019, we gave 1.8 million right back to Converge each year, and to help start and strengthen the churches. So far, since 1996, we've given a total of 19.8 million right back into Converge. And those funds have helped different ministries in Converge, like recently Converge gave, I believe it was $500,000 in a grant form to help churches, church plants during the COVID times. So those, your local bank, you know, they work just like a bank, where we do work a lot more like a ministry, and believe in just the ministry that Converge does in supporting the Converge churches like yourself. We are also a very healthy, I know some of you might be wondering how we're doing. We're still being, God has blessed our ministry and blessed the Cornerstone Fund through many investors and churches that have been doing very well through this time. Right now we have 273.6 million in assets. We do have 226.5 million in our loan portfolio and 39 million in net assets. We have 3,100 plus investors, and we've been serving over 1,000 ministry through our 65 plus years.
Thank you, Barb, for walking through some of the things that distinguish us from the local bank. One of the things that I would add too is, when you're working with a ministry partner, it's helpful to know that you're working with a partner who understands what you're trying to do. And that's with exclusively lending to churches. Our main goal is to help you not only sustain the ministry while you're also taking on a loan, but also thrive and grow in your ministry. So as we work with churches, as we qualify loans, as we approve loans, it is a big deal for us to understand how you're using those funds, what you are doing for ministry, your ministry distinctive, what sets you apart from other ministry that are around you, other churches that are around you, and how we can support you, not just from lending into a situation, helping you buy a building or expand on your current property, but also by supporting you in ministry and helping you grow that ministry as well. Understanding demographics, for instance, in your area and how that may impact the building that you're either purchasing, renovating, and or building. So our distinctives are key. Primarily because we see ourselves as a part of the family of Converge. We are in this together with you, and we understand that we're better together with you guys. Let's dive a little bit into some of the specifics. I know many of you signed on specifically to find out how in the world we are addressing churches, not just churches that have current loans with us, but also churches who are exploring options for loans here in the near future, how COVID-19 will impact that, obviously the PPP loans and the CARES Act, how that plays into the whole equation. So I do want to dive into some of those things specifically. So first and foremost, how is Converge Cornerstone partnering through the crisis? And the reality of it is it caught us by surprise as much as it caught the church by surprise. And there are questions that always come from that. And I think generally speaking, the way that we have handled it is a case-by-case scenario. We understand 1,400 churches across the U.S. That we work with, that we partner with. All of you have unique circumstances as a result, not only of your communities and your demographics, but also of your financials. It is just not who we are to come out with a blanket statement in terms of how we are handling these things that apply to every single one of our loans. It's just not fair. It's not who we are. We are a partner in it, and that means on the individual level, we want to hear from you. We want to know how it's impacting you, and we want to work together to come toward a solution. A lot of the questions that we've gotten more recently has been in regards to looking forward. Some of the churches, no matter the size really, who are either in the middle of the project or who were about to take on an additional project, they come to us asking the question of, what does this mean? Are you stopping, or are you continuing to put out money? Are you worried? And a lot of that is driven, I think, by the angst around some of the banks. We know that the banks have obviously dropped their rates, but really do the banks want to lend into situations where churches aren't able to meet in person? And I think a lot of the angst, the fear associated with those questions are built around this narrative that is happening, not just geographically, but even nationwide throughout the media and different venues through which things are being communicated. Simple answer is yes, absolutely. We are continuing to lend into the current environment. Now, I would add that we are being a little more cautious on the underwriting side of things. I am asking a few more questions. Our loan committee is asking more questions. We want to know how you, as the church, are adapting to what has happened. Churches who previously did not have online platform, have you made the shift? Are you working with district ministers? Are you working with national to figure out ways to continue to meet the needs of your congregation through online? That also would include online platforms. If you didn't have online platforms before, have you begun exploring those? Are you answering the questions of your congregation of how in the world am I supposed to give? What is this giving going to now that we don't have certain expenses? You know, do we have an opportunity to meet the need in our community? All of these are things that that we start asking those questions of saying, how have you adapted? What are you doing to adjust to the situation? And we want to know, we want to see, and then from that planning forward as well. How are you going to address this? What are you doing now that we're starting to see some states come through? How are you going to, again, adapt? And it changes week by week. And we know that, and that's why it's an ongoing conversation in the midst of the crisis. How have Cornerstone Fund rates been impacted? It's another question that we're getting significantly, and again, that's driven by local media, also by the banks. Obviously, we all know the Fed rates just dropped and plummeted to where now banks and other lenders can obviously borrow money from the Fed at 0%, so they're able to cut their rates at all. How did that impact the Converge Cornerstone Fund? Generally speaking, the simple answer is we have dropped our rates. We are continuing to look at that on really a week-by-week basis to see what we can do and how that applies to how our cost of fund, along with some of the spread that we have on top of that, impacts our rates. It's helpful to talk through here how Cornerstone Fund comes up with our rates as opposed to maybe your local lender. Cornerstone Fund, we have, as Barb talked about a few minutes ago, roughly 3,100 investors. Those are both individuals and churches who invest in the Cornerstone Fund. And we have a responsibility to many of you who are on here who are also investors, who have trusted us with their money. We have a responsibility back. And in that comes what we call a cost of fund. In other words, we have a responsibility back to our investors to pay you what we have promised. And as a result, there is an average number throughout all of our investments that we have that comes up to our cost of fund. And then our rates are set based on that cost of fund plus a small spread to help us cover some of the staff and some of the operating costs that come at it. So currently, just to give you an idea of where we currently are, current cost of funds are 2.69. We have a spread of roughly 2% over top of that. Even with that 2%, we're still underneath that. So really our spread is closer to about 1.5, 1.6 right now, with our current rate offering being at 4.625. So that gives you some idea. Most of the loans that we enter into, and I know Barb will talk about this a little bit later on, most of the loans that we enter into are 20-year loans with adjustable rates and review periods of either every 3 or every 5 years. So it gives you some idea in terms of how that is impacting it. Those of you who have current loans with us, you know that. Those that are exploring that, is helpful to understand that when Barb said earlier that we are in it throughout the long haul of the loan, what we're saying is we're engaging in that for the full 20 years of that term. Yeah, there are review periods. Yes, there are possible rate adjustment, but we are sticking with you. There's no additional fees. We're not looking to refinance. We're not going to have to requalify that loan at any point. We are sticking with you. We're committed to you for 20 years, unlike most local lenders. Let's start talking about just a little bit the CARES Act and the PPP loan. That's Payroll Protection Plan loan, for those of you who are wondering what PPP stands for. I think we all were surprised how quickly the federal government was able to come out with some sort of an act to be able to assist and even further beyond that. By no means are we experts on this, but I think everyone who was part of that conversation, even from the get-go, was rather surprised in terms of how the CARES Act also benefited churches throughout this. And we got calls very quickly in the process, very early in the process of, number one, do you do PPP loans? No. I'll answer that real quickly. We do not. Since it is a Small Business Administration backed loan, federally backed loan, it has to be a federally accredited SBA lender. So one of the things we started telling churches very quickly is start working with whoever your local lender is, the bank that holds your checking and savings account. Start talking to them. If they're not an authorized SBA lender, they're going to point you in the direction of who can help you in regard to that. And again, we had churches really all across the spectrum that began. We encouraged churches to go ahead and look into it, begin applying. It doesn't hurt anything to apply for it. And we had many churches that indeed did apply, have been approved, and also have received funding up to this point. So the question that we got often, though, was, does the payroll protection plan impact existing and or future loan with Cornerstone Fund? I'll answer the first one first. Existing loans. No. The short answer is no, it does not impact your current loan. And here's why. The PPP loan, with it being SBA backed, again, the way it was drawn up in the sense of the obvious forgiveness, if you follow the certain rules, it almost was presented as more of a grant than it was even a loan. Now, I realize there are rules that have to be followed, and there are bank regulations and all those types of things. But for the most part, they are not secured by any collateral. They don't require any type of guarantee then or guarantors. And again, if you follow those rules, then it should be forgivable in the end. And what is not is still at a relatively low rate. We're also, our understanding of the PPP loan is such a, in comparison to a loan for collateral, is such a small portion, covering 3 or 4 months worth of expenses, obviously associated with payroll. The big goal was to help churches, help nonprofits, help organizations keep their employees on the payroll, keep them paid, keep them moving forward. So all that being said, I like to throw in the caveat, make sure you read through the documentation, read through the small print, so to speak, and make sure you're not missing something. But generally speaking, it should not have any impact long-term on your existing loans. It should not impact our collateral position on existing loans. Does it impact future loans? Yes and no. And I think I want to nuance that just a little bit in terms of what I mean by that. No, in the sense that we're not going to penalize you in our underwriting procedure for taking the payroll protection loan. We understand. In fact, we encourage churches to go and apply and try and get them. So it would be talking out of both sides of our mouth if we say go and get it, and then we penalize you for it in some form or fashion in the underwriting side of things. However, the reason that I say yes, it can impact it is because we do want to make sure we're understanding how it was used and the impact that it has on the church moving forward. If there were problems going into COVID-19 that suddenly the PPP loan suddenly wiped away for a period of time, that doesn't necessarily mean that there were not financial issues coming out of that either. So we have to understand how it was being used. We have to understand why. We have to understand different pieces of it. And that's really a bigger picture of the financial package anyway, in terms of underwriting, is what's going on, how did it happen. We'll talk a little bit about that in just a minute too. But it's really understanding the full picture of what's going on within the church, what has been going on, what's going on currently, and how do we project for the future. So yes and no. It is a yes and no. It does have some impact because we will ask the question, but it is not going to be a penalization for you as you move forward. Does it impact collateral? No, it does not. Will the church receive the PPP loan impact their ability to get a future loan with us? Again, It's not going to impact in the sense that if you have it, we're going to say no, or that there's going to be any period of time that we're looking for you to wait before we start an underwriting process. It just simply means we have to understand the full picture. It's another piece of the pie that we need explanation on moving forward. Let's talk a little bit about moving forward. I told you we would share a little into that. Lending amidst COVID-19, really not just in the middle of it, but also looking at it moving forward. How does COVID-19 crisis impact churches exploring current and or future loans? What specific question are we asking at this time to churches, for churches to answer? You know, one of the things that we're seeing obviously is there are churches who, in terms of their bottom line, what we would call the net income from a monthly basis, that number has grown, and mainly not necessarily because giving has grown. You may even have seen a dip a little bit in giving, but it's grown because your expenses have decreased, and or the PPP loan came in and suddenly this, you know, off your operating budget, suddenly as a balance sheet item in terms of this lump sum of money that was then fused to help cover some of those expenses over a period of time. How do we address that? Suddenly you have more net income. Again, it comes back to what are we going to settle into over time? And quite honestly, there's some of those questions that just can't be answered yet. We're seeing churches that are experiencing a larger amount of giving because they have figured out really incredible ways to meet the needs in their community. And not just in their community, but even within their church. And the people within the church are giving more to the church because they know that it is physically going to meet the needs of people in the church and in the community. So as a result, the income is rising, but so are some of those expenses. So it's really beginning to understand, really dig into how is this going to impact you in the long run? What is this going to, you know, ultimately, what is this going to do for you as a church as you continue to push the envelope a little bit in terms of, you know, taking on a new loan? How is the Cornerstone Fund going to address a decrease in giving and or attendance during the period of COVID-19 crisis? You know, Barb mentioned 65 years of lending experience, and while we haven't been through this exact situation, obviously none of us have, 65 years does afford us the opportunity to experience some what we would consider to be crisis at times. For instance, the recession back in 2008, 2009. We have experienced going through some of these things that have impacted not just geographically specific areas, but even nationally, the churches that we work with and that we partner with. So I will say this, it is not in our nature to respond out of immediate shock or immediate concern. There are measures that we put in place to make sure, as Barb mentioned, that we can work through these things, at least for a period of time. So even when the unexpected comes, it doesn't put us in this frantic state of having to immediately respond. As a result, then, as the churches started calling us and asking what we could do, we have the ability, we know we have the ability in cash flow to be able to tell a church, hey, you know what, I get it. You got an older congregation, 0% at this point of your giving comes in online. Take a few weeks, work toward that, do what you can, educate your people. In the meantime, we are going to work with you on the payment, and we're going to adjust those for a time period. We don't want it to be a long-term situation. We want it to be a short-term situation. Let's not turn what we hope is a short-term scenario into a long-term problem by deferring payments entirely or doing anything. We want you to continue making some type of payment, but let's adjust that. That all comes from the assurance of knowing that we have prepared and we have been through these situations before. And you as a church who are considering a lender can know that we've addressed situations like this. And why it's not specifically what we've gone through, obviously, with COVID-19. We've been through enough to be able to say, hey, here's how we can address this. and here's what we can do now. We can partner together with that. I'll give you some specifics, and you may want to jot these down just because I didn't put them into the presentation, but let me give you 3 words that are helpful from an underwriter in terms of the questions that we will ask the church right now and or here in the future regarding COVID-19. Explanation, resolve, and mitigation. You say, what do those mean? Let me explain those or nuance those just a little bit. The explanation, that's where we're going to ask the question of what was really going on. Now, the simple answer would be we were in the midst of COVID-19. But as we know, every church has an incredibly unique situation as a result of COVID-19. And we want to get down beneath the surface of, yeah, just COVID-19 was going on, to the specifics of what was really going on. For instance, as I explained earlier, we have an older congregation, and up to that point, we had no online platform for giving. Or, you know what, we had no ability to go online, and it took us 2 or 3 weeks to even figure out how to even get online. And as a result of that, we experienced some drop off in giving and or attendance and so forth and so on. All of those are beneath the surface. Yeah, they're impacted by COVID-19. But they're also at the same time getting to really understanding what really was the impact, because that's going to set us up to then look at the next thing is the resolve. The resolve is, what did you do about it in response, right? So yeah, okay, we didn't have anybody giving online up before this, but here's what we did. We talked with district executive ministers, we talked with others, we talked with other churches that we partner with in our area, and we figured out as quickly as we possibly could how to get an online platform for our people to be able to give online. Or maybe the answer was, you know what, we realized that no matter if we created an online platform, didn't matter, that most of our people in our congregation still like giving physical checks. So you know what we did? We picked up the phone and we called our people and we asked them how we could serve. And we asked them if there was anything that they needed. And we stopped by their house and we gave them what they needed. And in result, they gave back to the church because they saw the church meeting a need. All of that shows resolve. As an underwriter, when I look at it, yeah, I may see a dip in giving, but there's an explanation for it. And then there's resolve to solve the problem, figure it out. And then the last piece is mitigation, and that's looking forward. That's saying, hey, we're not going to return to what we have known forever as normal. We've got to figure this out. Hey, there are churches across America who are experiencing this uptick in people who are viewing their churches, even within their community, who never viewed their churches before, who never would have walked into the front door of their churches. And now they've got a captive audience that they never would have had before. Many of you can speak, of this yourself. Now we have a captive audience. What are you going to do to pull them in? What are you going to do moving forward to pull them in? And as an underwriter, we look at that and we say, hey, how can we assist you in this? And how does that play into your ability to service a loan? Let's not forget, we're looking at this because you put in a request for a loan. How are you going to continue to tap into those people who, now are a captive audience that you never had before? So explanation, resolve, mitigation. Those are the narrative that we want to understand. And that's not just what applies to COVID-19. That's really, listen, 20 years for a loan, a history of a church has, there's a lot that can go on, a lot of things that on an individual basis can be considered a crisis, or whether it's a national crisis like COVID-19. Those are the questions we're going to ask you, and those are always important factors. Explanation of what happened, resolve to be able to adapt to the situation, and then mitigation moving forward. What are we going to do now? How are we going to address this moving forward? I'll answer this last question and then turn it back over to Barb for a few. But what if the church is still not able to gather at full capacity at the time of the loan application? As you can imagine, I'm still getting applications. Barb and I are still working on application as we speak. Really, well over half of the country is still not able to meet in person. So what does that mean, especially from an attendance standpoint? How do we address that? I think the the question is always important, and really this is not just during this period, but always is, what's the purpose of the space that you are looking to either buy or build? What's the purpose of it? What are you using it for? We were talking as a team just recently that the reality of some of what we're seeing in the midst of all of this is churches who are shifting away from just building a box, so to speak, to meet in on Sunday morning, to building a ministry center that it can be actively used throughout the week. And those are some of the changes that we've even seen over the last. So when we look at the attendance is really an understanding of what makes up your income. You know, if I were lending in the world of working in commercial lending, and I looked at an organization, I'm looking at the product they sell and how much of it that they do sell and what brings in their income, what helps them understand or helps us as an underwriter understand their income. When it comes to a church, it's your giving units, it's your people. So yes, at the end of the day, you may have 1,000 people that show up on your online service on Saturday night and Sunday morning, whenever it is that you meet. But how many of those are giving? What makes up your income? And how are you working to engage more people into investing into your church on a weekly basis? Those are the questions that we are going to ask. So yeah, you may not be able to meet, but the reality of it is that you still have people who are invested in your ministry, people who are still committed to your ministry, and they are giving to it as a result of that. I'm going to turn it back over to Barb for just a few minutes. She's going to address some other things, and then we'll get to some specific questions that you guys have. Don't forget, you can ask us questions. Feel free to type into any of those questions right now, and we'll get to those here in just a few minutes.
Kirk, real quick, if you want to answer, there is one question about, is it wise to refinance at this point? Would you like to answer that now or at the end?
Yeah, I can go ahead and address that now. You know, one thing that is always important to understand when you refinance is that you're really starting that loan over from scratch. And a lot of times, you know, especially, and this is a bigger issue for another time, but a lot of times when churches approach how they handle their loan, they think of it through what is most familiar to them, which again is a residential mortgage loan when you purchase a house or something in those regards. And the reality of it is that, you know, sometimes, especially if you're trying to build up equity in a property over the course of time, it does make more sense to take advantage of lower rates. When it comes to commercial loans, the reality is that it's not as productive. And the reason why is because you're really, you know, with us, for instance, and a lender too, and this is true of most commercial loans, you're not fixing a rate for any extended period of time. You're looking at 3 to 5 years max on the rate that you're going to get. And the reality of it is if you refinance, there's going to be costs associated with that. You're starting back over where the majority of the payment that you were making is going against interest. And because you're extending time, you're going to end up paying more interest in the end. So generally speaking, I would say, is it wise to refinance in the midst of this? You know, it can be a case-by-case scenario, but generally speaking, I would say no. And part of that, you know, again, has to do with you're not really saving that much money, and you're better off just kind of sticking it through this season. Now, I'll address this. If you are currently with a bank and they are promising you the world, realize that sooner or later, the banks will have to start paying for money that they lend you again. And the result of that will be in the form of risk management toward your loan, which is obviously how they would base your interest payment, but also then, you know, how much are they going to charge you in different items associated with that. So if you're currently with a bank, they're promising you the world, question it. And then, you know, feel free, as always, and I know Barb's going to talk about it, feel free to run those questions by us. Let us run an analysis. Let us see what we can do for you, because it may sound good now. It may not be that much or that good for you here in a few years.
Great. Thanks, Kirk. So we're going to be moving on to a little bit of ways we can partner with your church. We understand not all of you have a loan with us. Some of you have loans. Others are looking into possibly needing a loan in the future. First of all, I want to start out with our investments. Cornerstone Fund is able to do ministry in Converge, is able to give loans to other Converge churches only because of the 3,100 investors. So the churches that invest with us, the individuals within your church that invest with us, that is where we get our funds to be able to do loans for Converge churches. So we understand right now might not be the best time for some churches to start an investment, but it's something that as I talk to church planners and other smaller churches, to start looking at what investments, what kind of a savings account, having a reserve, having a building fund. Maybe you're not even dreaming about building or purchasing anytime soon, but to start that building fund, to start that reserve now, so that when that building comes along, when that land comes along, you are already prepared for that. I have so many church planners that 5 years down the line, they give me a call and they're like, Barb, we have this perfect building. It's going to, that we want to be able to purchase, but, they're 5 years in and they are just now thinking about needing to save for that building. So trying to figure out at what point your church can start an investment in a savings account for, the times, even like the next crisis, either whether it's in your church or, an instance like COVID. Also, again, want to just say that it is because of churches. I looked at who had signed up for this webinar, and many of you are already invested with us. And I want to thank you for that, because it is your investments that also helps us minister to other churches through these times. So again, I want to thank you for the investments that you have with us. We do have different investment options. I'll run through that real quick. We have the demand investment, which is like a church savings investment, a liquid account, and that is earning a 1.5%, which is going to be higher than typically your local bank savings account is. So if you're looking to save money, you can email me later and I can send you information about that account. Again, it's a liquid account. You can get to your funds at any time. And we are able to wire money within 24 hours. We do have term investments anywhere from 1 year to 5 years, with our special right now, a 3-year at 2.25%. So again, investments, we would not be able to do loans, we would not be able to do ministry and be so generous with giving back into Converge without people and without churches like yourself that invest with Cornerstone Fund. The other ways that we are able to partner with your church, I know someone had asked a question of, what's the difference between some of our loans? We do a refinancing. We do refinancing loans, land purchases, construction, renovation, building purchase. The difference between, construction could be purchasing land and building from the raw land on up, or it could be just purchasing a building and renovating that. So if you have, further questions about those differences, you can, again, you can contact me and I would love to kind of walk through that with you. As Kirk stated earlier, we are still funding loans. We are using some extra caution, but we are still funding loans. And it's been a very interesting time, especially for church planners, where all of a sudden, buildings are opening up and prices are dropping to where they can afford a building for the first time. And it has been very exciting on my end to be able to talk and hear churches that I've been talking to for years and have not been able to find a building that they can afford are now finding buildings that are becoming available. So I've been seeing God work in many ways in the last several weeks and months. A little bit about our loans. Our loans rate right now, as Kirk said earlier, is about 4.625%, and that's over a 20-year amortization. And our loans would adjust every 3 years to about 2 or 3% over our cost of funds. Our loans do not balloon, and that's, Kirk referred to that in some of other banks, your local bank, where they might get you at a very low interest rate right now. But be careful if they do start talking about balloons. Our loans do not balloon. They will reprice. We will look at our interest rate at the time, and they will reprice with no new underwriting and no new expenses. For church plants, churches that are under 10 years old, we do give a discounted interest rate on church plants. Again, we just are very passionate for the ministry that you're doing, and we want to support you as best we can. And then I want to go into, as we go into the next slide, the best piece of advice that Kirk and I always say to churches is that it's never too early to start the conversation with us. If you ever have any questions, whether your board or your leadership is even just thinking about or dreaming about what a future loan or future building might look like, please give us a call. We do offer a free financial analysis, and where in the free financial analysis, if your church were to send us the 3 years profit and loss statements and year-to-date profit and loss statements, we will be able to then go over those with you and kind of give you some guidelines and maybe even just a place to start to help you determine what a reasonable debt might look like for your church, or also to help you strategize what those next steps might look like. We've had churches that call us and several different times as they find different buildings and have different dreams, and they'll keep coming back for another analysis and going, how is this going to work? How does this does it fit within our plan? And what would you suggest our next steps might be? We've been doing this for quite a while, and so we have some insights into different structures and like to help be creative with you in how you, as you're looking into the different buildings or land. So again, if you want a free financial analysis, you would just contact me and send me your 3 years profit and loss statements, and I can end the year-to-date profit and loss statement. And what that would do is then I would schedule time with Kirk to kind of go over those finances with you. And once you do contact me, what I like to do, being the relationship specialist, is I want to just be a ministry partner with you. So from dreaming stage, I want to be able to just check in, kind of take that stress off your shoulders and just check in with you now and then, see if there's any updates, see if there's anything, I can help you with, or what those next steps might be. And then once I have that completed application, I hand that over to Kirk. So Kirk, do you have any other points that you want to add before we go to the question and answer portion?
Yeah, I'll just emphasize the financial analysis. It's not only a tool for us, obviously, as we work with you. I tell this story all the time, so forgive me if you've heard it, because we share this at national events and in different district meetings as well. But I had a church about 2 years ago, a young church that was looking at property. I think 10 different properties I ran analysis on just to see worked with the pastor, worked with the team on, will this work? Will this work? Will this work? Ultimately, because we had all the financials, because we had so many conversations and acquired so much information up to that point, when the opportunity came, actually a piece of property that had been just outside of their range dropped by about $50,000 unexpectedly. But because we had everything, they knew they were going to have to move quickly. We had that loan qualified, approved, and a commitment letter out in front of them within about 3 weeks, and closed within another month, 3 to 4 weeks beyond that. And that church is meeting there now. They're growing. They're meeting the needs of their community. It's a phenomenal story. But I tell you, and I know this pastor would echo this, that it was the financial analysis. It was being able. Barb and I, we dub ourselves as counselors, because I think sometimes the pastor, especially as you're going through, whether it be capital campaign, whether it be searching for property, it's a strenuous type of opportunity for you during this period of time. But we're here. We're eager to help. We're here to answer questions. We love it. That's why we do what we do. We're here to serve you guys. So take advantage of it. It's always a great opportunity. We're going to be real with you, and we're going to help you put together steps that are perfect for you to take to get into the building or into the property that you're looking for. Again, we are going to take some questions. I just want to, in case you don't see it, it should be on the little taskbar there. There should be a Q&A. You can go in and type questions, any that you have specifically, and it can be really about anything, whether it's COVID-19 specifically, whether it's specific to your church, whether it's about something in the future. Please shoot us some questions. We want to make sure that we are obviously answering any questions that you may have specifically for us. Barb, I know you were managing the questions. Are there any that you see right off the bat that you want me to take a stab at?
I mentioned ballooning earlier. Do you want to explain what a balloon payment might look like?
Yeah, absolutely. So a balloon payment is essentially amortizing out for the sake of what your monthly payment would be, is amortizing a loan out over a longer period of time than what your term is. So in other words, if I amortize the loan out over 25 years, but I term it for 10 years, that means that you are making a payment as if you were going to pay it off in 25, but I'm requiring you to essentially pay it off in 10 years. And as a result, there will be a lump sum of principal that is due at the end of that 10 years. And that is what is called a balloon payment. So different lenders handle those different ways. But at the end of the maturity of that term, that piece has to be addressed. So whether that is a refinance piece and or a payoff of some sort, whatever that looks like. So it's always important, and really I think the part of the reason this came up is that it's typical because banks kind of hook their borrowers by really getting them into that window. Most borrowers come to a scenario with a loan, not only thinking of how much loan do they need in order to purchase a building, build the building that they want to build, but also how much can they afford from a monthly standpoint. And a lot of time, lenders will work with that number on a monthly basis by adjusting that amortization. But the reality or the rate over a period of time, but the reality of it is that they're not committing to you for really a long period of time. So most banks, particularly on commercial deals, are looking for a term of about 5 years that they are locking you into before that loan matures, and then you have to address whatever that balloon payment would be. So if you take out $1 million, they may amortize it over 25 years or even 30 years in some cases, but they're going to term it out after 5, and you're going to have to deal with whatever principal balance has not been paid off at the period of that 5 years. And you're subject then to obviously not only refinancing fees, but also requalifying for a loan and also the rates that have adjusted to that point by that time. So balloons are big, and that is it's important, I think, as a key feature of what we are saying to you is, hey, we're not going to do that to you. Where the bank doesn't want to commit more than 5 years because they want to be able to re-examine whether or not you are sustaining we're saying to you, no, we're a partner in ministry with you. We're committing to you for the full 20 years of the loan.
So we have another question here. I'll give a little bit of an answer, and then Kirk, you can add on top of that. We're a small church beginning a capital campaign in the next month or so. For our first permanent facility that will most likely require some kind of a loan, looking for guidance on best practices. Again, as I mentioned earlier, if you could contact me and get me your 3 years profit and loss statements and year-to-date profit and loss statement, that is something that that is a perfect situation where I would say a financial analysis would be your next step, so that we can help you look for what your church needs specifically and not just give you a blanket statement. Kirk, I might add on to that the questions of possibly if you're a young church planner looking at needing a loan in the near future, what advice would you give a young church planner?
Yeah, I think the answers fit into, you know, somewhat of the same scenario, and the financial analysis is by far hi Paul, but the financial analysis is by far the best way of looking into that and starting to answer some of those questions. I love it in your particular question that the church is interested in doing a capital campaign. The reason that is so big is that, yes, not to get too much into the weeds, but we are always looking for skin in the game, so to speak, from the church. What are you willing to do? And part of the way that we do that is through our maximum loan to value. We will lend up to, you know, on a purchase of a property or into a construction project, we're willing to lend up to 75% loan to value. That means there's at least 25% of the project, whatever the project is you're looking at or a purchase that you're looking at, that you're going to have to bring to the table with additional costs for contingency items and closing costs. So it is important to always be thinking through that and be thinking of how can we best position ourselves, not just from an underwriting standpoint, what makes us look good, but also from the standpoint of how can we best position ourselves to where we don't have to carry more debt than what is needed. And the best way to do that, obviously, is raise the money on the front end and be able to pay for it and or engage in a capital campaign. You know, some key steps that I typically talk through with churches in that financial analysis, beyond just talking through the financials, is to say, hey, what is it that you're looking for? What do you need? If it's your first building, you know, you've been doing ministry now for a season, whatever that season may be. And we work with churches who have been in ministry for a year, you know, to over 100 years. So what is it that you need? You know your current ministry environment. What is it that you absolutely need? Where are the stressor points? If you're not feeling stressor points, then it's going to be hard to sell your congregation on the need for a new space. There's got to be stressors, and it's you know, obviously we want you to begin having those conversations before you're completely over the top. But there is it is important to understand, because that's vision casting. That's what you're going to stand on stage as a leader and talk to your congregation of what they're going to be investing in over the next 20 years or so with this loan. So it's important to understand what you need, and from that you're going to answer questions of, how much space, what type of space am I looking for? Am I going out and looking for a turnkey building that I can walk in and it's immaculate and already has my brand and my logo on the side of it? Or am I looking at a rundown, building that is practically falling in that I want to use as a shell to be able to invest back into my community and obviously fix something up and use it for a ministry space? That is going to impact, again, the size, the type of building, how much is going to have to go into it, not just to make it look the way that you want it to do ministry, but even to meet the needs of the city, municipality, county, whoever is the governing authority over that, to get conditional use permits, to get zoning privileges, so forth and so on, for you to be able to actually gather there as a congregation. So all of those things are big and key questions that you as a congregation need to be asking as you're looking at something, even now, because that's going to, ultimately it's going to dictate what your budget is, then how much you need to raise. It's going to also answer the question of how much you're going to have to service from a loan moving forward. There are a lot of different steps in that in that process, but it also helps you not waste the time, so to speak, on looking at properties that are just going to are going to be a waste of time in the end. Tell churches all the time, the financial analysis is going to help your team narrow yourself down. You're going to be able to come at it from an approach that is an educated approach that is going to allow you not to waste the time on things that don't need to be wasted on. If I could say anything, it is this: most of the churches that we talk to that hold off on doing a financial analysis and then come to it, the pressure points or the pain point are that if they would have engaged us earlier, we would have removed some of the hurdles that we now face, and ultimately now we're on a timeline. So engaging us early, answering those questions, being pinpointed, and/or having the steps in place so that you know what to do moving forward is obviously key, and that's why the financial analysis is so important.
Okay, Kirk, if you wouldn't mind putting up the last slide that has our contact information on it, and then you have about 1 minute and 30 seconds to answer this question. Is there a good ratio of income or attendance to paid staff for a church to use?
Ratio, it's hard to say on the ratio. Sometimes you need staff for different things and beyond. So the answer is no. There's not an easy answer to that question, but I will tell you, in terms of who is asking this question specifically, if we're seeing, in that 50, 55, 60% of your income and or your expenses is going towards staff expenses, we're going to have some questions as to why. However, on the opposite end of that, if we're seeing only 15 or 20%, for instance, we have churches that come to us that pastors are bivocational. One of the first questions we always ask is, do you have intentions of bringing a pastor on full time and or expanding your ministry? We know that it takes people to be able to minister to the congregation as you continue to grow. So there's no rule of thumb, so to speak, necessarily. But it is important for us to understand if a large percentage of your expenses are going out to staffing costs, to understand why. Different parts of the country are more expensive to house staff there. We get that. So it's important to just understand what's going on with it.
Okay, well, thank you very much for joining us. I believe our time is up. And our information, if you need to contact us, is on this slide. Thank you again for joining, and feel free to email us and contact us with any further questions.